The broadcast is now starting. All attendees are in listen-only mode.
जी लाइव हो गया आप स्टार्ट कर सकते हैं
Good morning, everyone. And this is Santosh Chaurasia from HDFC Security. Welcomes you all on today's webinar. So today's webinar is on like market basically at 65,000 and above. So thing is that key on this level, there are many things are coming into the mind, that is how the market will behave further, and what should be the strategy uh, for investment in mutual fund uh, further. So we have today Mohit Karkera from HDFC AMC, who will just take you to the entire PPT and explanation about the market today. And later on, after completing this session, after completing this PPT, we'll have a question and answer round. So, Mohit, over to you.
Yeah, good morning, everyone present on the call. This is Mohit Karkera from HDFC Mutual Fund. Thank you, Santosh ji, for having me here. And I would like to thank HDFC Securities for giving this opportunity. So today we have a very interesting topic, and I guess any market participant who wants to invest in markets, they would definitely want to have a perspective of whether this is the right time to invest or not. So, so we intentionally choose this particular topic because this is one topic wherein everybody would like to have some kind of a perspective. And even while we basically go and talk to investors, this is one big overhang amongst a lot of people today in markets. And we being a part of industry, our idea is to basically, if you are suggesting you guys to invest at this levels, or if we are basically telling you to invest in markets through various different products, whether this is the right time or not, right? So market at 65,000 and beyond. So I'll start with a basic of markets, where I'll just take you through a general trivia. So just hear me out, and preferably, I'm sure a lot of people would also have questions on this particular topic. So I would urge you guys to also just make a note of your questions and type it so that we can take those questions later. So more importantly, market at 65,000. So today, when we meet our investors, the biggest overhang that they have today is markets are trading at lifetime high. Maybe this is not the right time to invest, and let's wait for some kind of a correction. And then probably that will be the time when we will start allocating money to equities, and then from there on, things will be at a better place. So while we try to do that, the idea is basically to extract value out of your decision, right? So anybody doesn't want to buy at a higher price, and it is a very basic logic. But if I have to tell you, if you just look into a number, so if a Sensex has grown from 40,000 to 65,000, obviously any even a child can tell you that 65,000 is costly than 40,000. But actually, there are a lot of variables behind this particular number which comes into play. And the idea of this presentation is to make you understand about those variables, and just to have a brief perspective ki, whatever you're doing is right or not, right? So if when we say markets are at 65,000, we mean say Sensex is trading at 65,000, and obviously if you are investing today, you are investing for the next 3 5 years and beyond. So what to expect? And if I have to tell you, markets are doing really very well today. But the problem when markets are doing well, there are two kinds of investors in markets today. So one who have already made money, but they also have some sitting on cash who want to top up. They feel this is not the right time. And another person who has never invested in markets and they want to indulge in markets, but obviously they have this fear. So whether this is both of this thought process is right or not is what we are going to discuss. So if we were to talk about Sensex, a brief trivia about Sensex is basically Sensex started in 1979. Okay, so 1979 it started with a base value of 100. Okay, so from 100 rupees it has come up to 65,000 rupees. But still we have this notion whether 65 पे रुक जाएगा उधर से reverse होगा and so on and so forth. Because with markets the problem is lot of emphasis is placed on buying and selling. राइट कि सस्ते में एंटर करते हैं और महंगे में निकल जाते हैं फिर सस्ते में फिर खरीदते हैं. So I'll show you a very interesting slide moving ahead. What are the risk of timing the market? So as I was saying, 1979 is when Sensex started, and today it is at 65,000 levels. So the money has grown 650 times. 650 गुना हो गया पैसा. So a 1 lakh rupees invested in Sensex has grown to 6.5 crores roughly, point to point, only one time investment. Now this is a huge amount of return, right? And if I have to talk about bulk of the money today of any investor, या आप net worth का calculation लगाने के लिए बैठते हैं, so you are invested only in three asset class, or any Indian for that matter is invested is only in three asset class. And if I have to name those asset class, it is basically real estate, gold, and FDs. So these are the three major asset class where the bulk of Indians have parked their money. And this has happened basically because people don't want to risk their money. And with stock market, the issue is nobody can promise you guaranteed returns. Just because nobody can promise you guaranteed returns, people have avoided this asset class altogether. And people see markets as a gambling den, right? Because nobody, even regulators, don't allow you to give you some kind of a surety, and doing that will also be very wrong. But how come an asset class has done so well and people still don't invest? And the basic reason of why people don't want to invest is they don't want to risk their money. And the idea of discussing this thing over and over every week is basically just to give you a perspective. If you are missing out on this asset class, you are doing a very big disservice to yourself. So it's not that if you are buying any kind of equity product, you are going to help that particular organization. It is in reverse. You are just giving more energy to your money, and you will get grow at a faster rate. The answer is why. This all things, whatever I am saying is one thing is okay, itna ban gaya and all of it. I am showing you a rosy scenario. But the idea is whatever is being told to you, the idea is ऐसा क्यों होता है? So it has not happened in a fluke, right? So idea is if certain thing 1 lakh has grown to 6.5 crores, so there is a certain amount of logic attached to it. And moving forward, also that 6.5 crores will go to 10 and beyond, right? So what is the logic? So whatever has happened till now, that is one thing. But the idea of doing this, what is going to happen in the coming 5-10 years? And we are in a very interesting trajectory today. If the markets are doing well, it is doing well for a reason, right? So 100 rupees going to 65,000 rupees, that is a gain of 650 times. Roughly, if you have grown your money by 16%, the money has grown to from 100 to 65,000. So the compounding annual growth rate is basically at 16%. But the interesting thing to look at is within this 43-44 years of markets, which were the best years for markets, right? The whole glamour of investing in equities is basically to make money quickly. ठीक है. uh, I may say long term is the best way to invest and all of that, but I'm into sales. When we talk one on one, nobody's interested in the next 20 years, 15 years, 25 years, 30 years. If you do that, there is no two things you will make money. But the fact of the matter is nobody has got that amount of patience. And uh, the fact of the matter is people invest money because they want to change their lives very quickly. That is the reason people get into a lot of different stuff wherein they use leverage, and possibly things go haywire as well. So the thing is, if we basically cull out the best years of markets, you might have heard about 1992, wherein there was this popular show which came out, Scam 1992. That was again an era where a big amount of money was made, and then there was a big fall. But if I have to talk about a bull market, okay, you might have heard about that today markets are in the middle of bull market. So we need to understand when we say that we are in the middle of bull market, what is the potential of bull market in the first place? Okay, when we say bull market hai and all of it, why don't we figure out, okay, bull market mein kitna paisa bana hai history mein? And it is very important to understand history, because uh, we are all humans, and humans behave in a certain manner. And moving forward, there is not going to be anything which is going to be different from what has happened in the past 40 years. So, see this, there are slides which I have. There are some datas which I have, but more importantly, the idea is to just hear out what I'm saying. There are certain slides on why we are so bullish into markets, but more importantly, what I was saying is if in the past 40 years things have grown, so obviously there have been good years and there have been bad years, and there is not going to be anything which is going to be different from what has happened in the past. So I have to talk about bull market. Bull market, the biggest bull market that India has seen is during 2003 to 2007. So it is very important to know that if we believe today that we are in a middle of bull market, we need to understand what is how much money a person has made in a bull market in percentage terms. Okay, so 2003 Sensex used to trade at 3,000 rupees. So from 3,000 Sensex moved up to 21,000. Okay, so 3,000 to 21,000, point to point is 700%. So a potential of a good time is 700% in 4 years. This is the history of markets, and this is not something that I'm talking out of. This is not a story. This is actually a data. This is a fact which has happened in the past. Now let us think what has happened currently. आज क्या हुआ है उसके बारे में सोचते हैं. So 3 years back, we witnessed a big fall in markets due to COVID, but that is a one-off event, right? You cannot expect a fall to happen like that, wherein the index only crashes by 40% and you enter at a lower level. People have made money, जिन्होंने भी invest किया, but the idea is if we just take it as a neutral event, and if we take Feb 2020 as a base figure, okay, so Feb 2020 markets used to trade at 40,000 levels. So from 40,000, markets have grown to 65,000. It has roughly been 3 years. So 3.3 and a half years. So market has grown what 50-70% in value. 50 से 70% grow हो गया. Right? In 3 years, if somebody has made, suppose you have invested say 50 lakh rupees, that would have easily grown to 80 lakh rupees. That's a good amount of money, right? So you have made good money, but that is only a 10% of what a bull market potential is. That is the first point of my presentation which I want to make. In a bull market, the quantum of money which is being made is huge. 700% versus last 3 years ka 60%. So we have only scratched the surface when it comes to bull market. And today's bull market, with the quantum, with the value that we have with us, is huge, right? So the past 3 years, you have only made what 50 to 60% on the index level. I'm not talking about any stock or anything of that sort. But the actual potential of a bull market, what the history tells us, what is the potential of a good time, it is 700%. So my first thing would be, if you're thinking to invest at this levels, still there is a large runway ahead of us. Now, when I say there is a large runway ahead of us, I'll come to the data of why we feel that there is a large runway ahead of us. Right. So moving forward, I'll move the slides moving ahead. So yeah, many basic slides. So first and foremost, when we think about markets, so why invest in equities in the first place? I'd like to basically touch upon this part as well. And then I'll also give you the current data on what are the green shoots that we have in our economy. There are basic 5, 6 slides on that as well. So when I say that people are only invested in FDs, gold and real estate, right, and people are not invested in equities, the very simple reason of why people don't invest in equities, because nobody gives you the guarantee, right? And stock market to satta bazaar hai. To a very large extent, this statement stock market to satta bazaar hai has changed big time in the past 10 years. When I joined the industry initially, so we were treated so differently, as if like we are trying to make people enter into a satta bazaar. And whenever people used to incur losses, there used to be a lot of blame game which used to happen. But that culture has changed big time today, wherein people are ready to take ownership of even a loss or a profit. Right, the overall perception towards equity has changed big time. So we need to understand, if we are investing in equity, how the returns is being made. So generally, it is said you need to basically expect 12 to 15% out of equities. Okay, and on top of it, no RM, no person, no analyst can guarantee you this 12 to 15% kind of a return, because in business there is no guarantee, right? How much business in a day, how much business is going to happen in a day, nobody can guarantee, right? How many customers are going to buy from you any kind of product or service? Obviously, then there is no guarantee, right? But if you want to expect 12 to 15% kind of a return out of equities, the answer is why, right? If somebody is suggesting you कि इसमें 12 से 15% बन जाएगा, the question is क्यों बनता है 12 से 15%? ओके, जब वहां पर गारंटी ही नहीं है, और व्हाट मेक्स यू टू से दैट 12 to 15% बनता है, right? So the simple answer to this question is, and the legitimate answer to this question is, when you invest money in equities, okay, the return that you make in equities, okay, and on an annual level and on long term basis, is parallel to the profit growth that company experiences or that portfolio experiences. So if there is a company X which has grown their profits by 20%, okay, in 5 years, the probability of making 20% on that particular company is very high. So in short, any business that you are going to invest in, the profit growth which that company experiences, okay, is going to be a portfolio return. Very simply put, there is no, again, there is no guarantee about it. There are other parameters also involved relating to this. But the basic thing is, if somebody is giving you a return expectation of 12 to 15%, he is telling you the profit growth rate of those companies is going to be 12 to 15%. And please understand, when you invest in equities, you are investing into an energy which has got a bigger power. So if we understand nature today, if we talk wealth today, and if we talk about 100% of wealth today, 90% of the wealth is only with the business people today. And when you invest in equities, you are joining hands with this business people. So if you are confident that there is an entrepreneur like Mukesh Ambani or a Narayan Murthy or a Ratan Tata, who you are confident about these people growing their businesses in 5, 10, 15 years, you can own their stocks. Not a recommendation, but just I'm telling you. And there is a very high probability that companies move faster than individuals who are working or who do their things their own way. And companies are a very powerful agent in a particular country, because even the government wants the company to do well, because that is where they are going to derive tax for themselves as well. And there are certain companies who are too big to fail, right? And if you are avoiding this asset class, just imagine you are not in that 90 to 10 kind of a game. So if you want to gravitate yourself towards that 90% game, you need to invest in equities. There is no other option. Either you need to be an entrepreneur yourself, wherein you are going to invest in your business, or it is good to also invest in other people's business through equities. And in mutual funds, basically what we do is we make a portfolio of companies, uh, wherein we believe these companies will grow at a very high rate. And the idea is, we make a portfolio of companies wherein the return profile of those companies will be in a range of 12 to 15%, and that is passed on. And there are various bouquet of schemes that we have. Some are large cap, small cap, mid caps, and beyond. And when you buy equities, okay, you're buying businesses. Okay, it's not that key. If you're buying a very strong business, right? So it is a very legitimate piece of thing that you have with yourself. It is not something, oh, price changes, आज ये है कल वो हो जाएगा. For that, you need to understand a little bit of fundamentals. But if you are owning a good large cap portfolio, there is a very high probability. History tells us past 10 years, past 15 years, past 20 years, past 5 years, you have made money to the tune of 15%. And you have to understand the incremental 1 or 2% extra that you make on equities. Okay, it goes a long way. Right? So this was about equities. Okay. I'll also give you a small trivia wherein my idea is not to give you the data from the slides. Those are all very basic things. So everybody want to be a crorepati, and basically when I made you understand of why you need to invest in equities, because the growth rate expected out of equities is in double digits. Okay, and if I have to make you understand the power of compounding, I'll just give you a simple matrix. Okay, just to tell you the power of equities and power of compounding. Okay, not necessarily that you will be able to achieve this kind of a growth rate, but just to make you. So life is all about stories, and what story you are going to believe to take you ahead in life, right? So if you have 10 lakh rupees with you today, and if you are able to somehow able to compound your money at 26% every year, which is a very tall task, to be very frank. So in 10 years this 10 lakh will grow to 1 crore rupees. Okay, but in 30 years your 10 lakhs will grow to 100 crores. Just think about it. You started with 10 lakh rupees, and you can have a portfolio worth 100 crore rupees just with having 10 lakh rupees. No additional investment, nothing. And this is only possible if you compound your money at 26% every year. Okay, so if you are able to compound your money at 26% every year for 30 years, your 10 lakhs will grow to basically 100 crores. That is the potential of equities. So your 10 lakh will grow to 1 crore in 10 years, 1 crore will grow to 10 crores, and then 10 crores will grow to 100 crores. That is the potential of. So this is a game changing aspect. If you add incremental more percentages to your portfolio every year, and the past 3 years the returns has been near to 15 to 17%. And there are many schemes, many stocks which has been able to give you that kind of a return. So with this, the idea is to basically keep a return expectation of 26% is too aggressive a thought. The idea is anywhere, if you are able to compound your portfolio in higher teens, it can do wonders for your portfolio. But the idea is to just tell you 26% आप हर साल कमाए तो आप 100 करोड़ तक पहुंच सकते हो 10 लाख के कैपिटल में भी, राइट? तो 26% आपको कमाने हैं, तो देन यू नीड टू बी वेरी मच अवेयर एंड इंफॉर्मेटिव अबाउट व्हाट इज हैपनिंग इन मार्केट्स, which company is growing at a faster pace. And there are n number of examples wherein people have made money to that amount, right? So the slide tells decadal growth rates of India. So why is it that you're going to earn money in equities from India? So more importantly, it is said whatever you earn from equity comes from nominal GDP. Okay, you might have heard India today is growing at 7%. No country in the world is growing at this level. Okay, no China, no US, no country is growing at this level. So we are the fastest uh, growth growing country all over the world. We are the youngest population all over the world. Our median age is 28 years, right? So 7% of real growth, and if you just add inflation, okay, 7 plus 3, it will be around 12, 13. So roughly if you assume 12% of nominal GDP, so नॉमिनल जीडीपी को करस्पॉन्ड करता है, ऐसे हमारे इकोनॉमिक किताबें कहते हैं. सो इक्विटीज में आपको वही रिटर्न मिलता है जितना नॉमिनल जीडीपी हो. बट इफ यू आर इन्वेस्टिंग इन अ गुड कंपनी, so that can go to a 1.5 or 1.25 times of a nominal GDP. So if you are owning good brands in your portfolio, and if you are owning some companies which have got great economic moat, you'll be able to achieve at least 1.5 times of the nominal GDP. So this is the, and you can see if the money has grown from 100 rupees to 65,000 rupees, wo kyun hua hai. So during 80 to 90, our nominal GDP was around 14%. 91 to 2000, it was 14.7. 2000 to 2010, it is 13.9, and it has slightly come down to near to 12%, because the size of our country has also grown big. What is the size of our whole economy? It is roughly $3.5 trillion. So $3.5 trillion, when I say $3.5 trillion, many of the people don't understand what is the quantum of money. So $1 trillion is basically 83 lakh crores. Kaise 83 lakh crores? 1 trillion is basically 1 lakh crore into 83, which is the rupee dollar conversion rate. So 1 lakh into 83 is 83 lakh crores. So 1 trillion is basically 83 lakh crores into 3.5, which will give you a figure of 280 to 285 lakh crores. तो हमारी जो इकोनॉमी है वो 285 लाख crores की है, जो हम एक साल में होता है, right? So you would be surprised to understand even our stock market size is around 285 to 300 lakh crores, right? So that is the beauty. If you want to understand the size of the market, कि market कितना बड़ा होने वाला है, you have to just understand कि economy की size क्या है. तो इकोनॉमी की साइज आज 285 लाख करोड़ है. अगर आप नेक्स्ट 7 साल के लिए इन्वेस्ट करना चाहते हो, तो आपको पता है 12% से तो बेसिक ग्रो होने ही वाली है. You are going to grow at 12% on a basic level. So if you just compound our economy size by 12%, then you can easily arrive on the overall figure in the next 6-7 years. So the point is, if you are at 300 lakh crores and if you compound your money by 12% for 7 years, we are going to double our size in next 6-7 years. Now, when we say double our size in next 6-7 years, it looks very casual. Okay, 5 से 6 साल में हमारी economy double हो गई. But just understand that in last 40 years, the stock market size is 300 lakh crores. And then in next 6-7 years, we are going to add another 300 to 350 lakh crores of market cap. मतलब जो 40 साल में आपका wealth बना है, ओके, या जितना आपको 40 इयर्स लगा है पहुंचने के लिए, नेक्स्ट 7 साल में उतना ही क्वांटम ऑफ मार्केट कैप आप ऐड करने वाले हैं, राइट? सो दिस इज ह्यूज, एंड देयरफॉर it is important that you invest at 65,000 levels, right? This is the real data of why you need to invest at 65,000 levels. So hear me out, that next 6-7 years, if you are a real believer that we are in a middle of bull run, then this is the time to invest in markets. And there are a lot of other reasons also which I would highlight. Okay, so basically, this is one of my very favorite slides when it comes to making people understand कि आप levels check मत करो और invested रहो. So when we say the global given you a return to the tune of 14-15%, हमने शुरुआत में आपको बताया कि 100 रुपए का सेंसेक्स 65,000 रुपीज हो गया. 100 rupees of Sensex has grew to 65,000 rupees, which is basically a return of 16%, right? But this is all data which has happened. The problem is a lot of people do come and tell you, like I'm also into sales, ki this they give you the rosy picture, but what is experienced within the investor, okay, that is very different from actually जो हम बोलते हैं और जो experience है वो बहुत अलग होता है. We say in the past 5 years, everybody has made almost doubled their money in 5 years. Okay, but if you just meet investors, not many investors have made that kind of a money. तो ऐसा क्यों होता है? So basically, if this is basically a data which we have extracted from 1990 till 2022. Okay, so anybody who has invested in 1990 and who has remained invested till 2022, okay, so this is a data for 32 years, they have made around 13.71%. Okay, so 32 years, one year is basically you have around 250 trading sessions. If you multiply 250 into 32, it will give you around 8,000 days. 8,000 दिन में से अगर आपने 10 दिन मिस कर लिया, 10 अच्छे दिन मिस कर लिए, out of 8,000 days, okay, your return has shrunk to 10.2%. If you have missed 20 days out of 8,000 days, which is 32 years, okay, your return comes to 8.36. And if you have missed 40 days, which is just half a percent, मतलब 100 दिन में से आपने आधा दिन invested नहीं रहा आपका पैसा, okay, your return is 4.5%. And this is exactly why people don't make money out of equities. People try to time the market, people try to act smart. I'll invest, I'll buy low and sell high. People don't try to understand what is it is impossible to try to time the market. And it is very important that when you basically buy equities, you need to have a perspective of owning the business and not trying to time the market. Right, so this is the highlight, that don't try to time the market, because if you try to time the market, you won't be able to derive even what FD has given you. FD will give you, right? So this is one important point which I want to make. Second thing is, okay, fine, I don't want to there are also people wherein who are very happy with what they have. Okay, they are not very aspirational कि भाई हमारे पास है पैसा, हम एफडी करेंगे. It's okay, fine, it's okay that we don't want to grow, and no issues, we are doing well with our jobs and businesses, and we are okay with it. So my argument to that particular thing is, if even if you have money today, okay, so suppose if you have say 1 crore cash with you, 1 करोड़ का कैश है आपके पास. 1 करोड़ कैश होना कोई बहुत बड़ी बात नहीं है. हालांकि इफ यू हैव कैश टुडे, इट इज एज गुड एज committing a crime, because you're not allowed to hold cash today. You need to have it in your bank account. So but just imagine you are having 1 crore cash, and you are a very casual person, and you have kept it in a cupboard, those 1 crore cash, to keep it protected. You don't believe in banks and all those stuff. And if you keep that 1 crore, okay, just as it is, and do your normal work, after 30 years, your 1 crore will degrow to 11 lakh rupees. It will lose 90% of the value. Okay, 90% of the value. मतलब आप ये समझ लो, कोई आपका 2000 का नोट पड़ा हुआ है, और अगर आपको 25-30 साल बाद मिलता है, तो उसकी वैल्यू सिर्फ 200 रुपए होगी. Okay, your money loses value because of inflation. And this was not a very big concern 30-35 years ago, because note print nahi hote the. That is the biggest reason for having inflation in the first place is government can issue a lot of notes today, and that is a topic of discussion some other day. But inflation is basically the fact of life. ऐसा कहते हैं कि जिंदगी में दो ही चीज सर्टन होता है, एक तो आपकी मौत और दूसरा टैक्सेस. और इन्फ्लेशन एक ऐसा, और तीसरा इन्फ्लेशन. सो इन्फ्लेशन एक तरीके का टैक्स है जो आपको पे करना है, इनडायरेक्ट, और जो इनविजिबल है, right? So if you don't plan your money, if you don't give your money enough energy, then it is going to wear out and it is only going to degrow over a period of time. And hence you need to invest in a asset class which has a potential to beat inflation. So with this, I will like to give you some pointers कि आज हमें जो लग रहा है वो अच्छा क्यों लग रहा है, तो वो मैं pointers दे देता हूँ. And see, whatever we are basically telling you, okay, ऐसा नहीं है कि it is not in line with markets. We are trying to be a big contrarian. So today markets is giving you the biggest evidence that things are doing really well, right? So India's consumption is at an inflection point today. Okay. So सबसे पहला चीज आपको हमको ये समझना है, we as a country are in a certain kind of a scenario जहां पर in the next 10 years there is a huge sum of money which can be made. ऐसा क्यों होगा? First reason is India's per capita, which is today at 2000, say $2,200, it is going to go to $5,200. What is per capita? Very simply put, how much a person earns in a particular in a country. Okay, an average Indian earning today is only $2,200, which is less than 2 lakh rupees today. We are a population of 140 and beyond, 140 crores plus, and we are the most populated country in the world. Okay, and when this is going to go from $2,200 to more than $5,000, just imagine in the next 7-8 years, लोगों का जो पर कैपिटा अर्निंग है वो 125% से बढ़ने वाला है, 2000 से $5,000 एंड बियॉन्ड. मतलब people will have more money in their hands. Why is it a good news for stock markets? Because stock market is investing is like investing in nature. So when people will have more money at their disposal, they are not going to invest money in stock markets. What they are going to do is they are going to buy good things for themselves. They are going to buy things which make them feel good. They are going to buy a good watch, good garments, shoes, mobile phones. So it is going to be a big consumption boom, and this is a no-brainer. And it is also seen any country which goes through this kind of a scenario, this 2000 to 5000 bracket a scenario, you have always seen a big stock market boom then. And there is a big correlation. Okay? So just hear me out very carefully. So China in 2007, the per capita that they had during 2007 was around $2,600. Okay, $2,600 से आज अगर उनका पर कैपिटा के बारे में बात करें तो $11,000 के ऊपर है. बट उनका 5 या 6 साल में चाइना's per capita grew up very fast, and 2007 was the year wherein Apple had its first original Apple store in China in 2007, जब उनका पर कैपिटा $2,600 का था. आज हमारा क्या सीन है? 2023, India has its first Apple store today at $2,200. ऐसा क्यों हुआ है? क्योंकि Apple knows it very clear that if the per capita income is going to go higher and they are going to sell more products in this country, right? And please understand, fund managers can be biased. स्टॉक मार्केट में बहुत लोग आते हैं, बहुत बड़ी बड़ी बातें करते हैं, and we are talking about Apple whose market cap is already more than $3 trillion. मतलब उनका साइज 300 लाख करोड़ का है. तो it is very difficult that a company of that size can go wrong. And lot of times global companies, they spend so much money on research. They know more about the market than we as a citizen know about our country. And this is not the only case. If I have to tell you, there is a brand called Louis Vuitton. Louis Vuitton is basically a very aspirational product. Okay, the brand ambassador of Louis Vuitton today is basically Deepika Padukone. Why is this happening in the first place? Why does a brand like Louis Vuitton wants to have a brand ambassador who is from Indian origin? Because it wants Indians to make themselves identify as closer to the brand, which will help them sell big in markets. So this is second example. Third example, a brand like Gucci. Okay, Alia Bhatt is our brand ambassador. So brands can tell you a lot about what is going to happen in the next 5-10 years than what we think. And these are all brands which have got great execution story and everything. And still, when we invest in markets, we are not comfortable. Our markets are at lifetime high. अभी नहीं करते हैं, ऊपर में है. So so suppose if you are earning an X amount today, I'm very sure everybody is very confident that your earning is only going to grow higher from here, right? Same is the case for companies. It is not going to stop here. If if a Sensex or a Nifty basket of companies is growing at a particular level, it is not going to stop here. It is only going to grow higher. So markets are not going to stop at 65,000. It is only going to go higher from here. And on top of it, we are at some kind of an inflection point. जिस वजह से कोई भी bad news effect नहीं होता. There is a war going on, but things are not getting affected. There is talk of US and Europe getting into recession, but we are still at lifetime high. So this is the general gist of the presentation. Second thing is demographic dividend. We are the youngest population in the world. The average age is 28. If I have to give you a data, US and China, they are at 38 and 40. So हमको US और China के मीडियन पे आने के लिए और 45 years लगेंगे. So 2070, India's median age will be around 38 and 40. So we are going to have a good young India for the next 40-45 years. And it is very obvious what young people do is they are least bothered about savings. They are only going to spend money. Okay. And when they spend money, they only spend money on premium products because it is a different era, right? They don't like to save. And when money goes out of the pocket, automatically there are certain beneficiaries of the money which is being spent. And if you want to be a beneficiary of the growth cycle that we are going to business, you need to buy equities. Fourth point is formalization. We all know our country is only getting more structured every day. So we all know the kind of GST collections that we are witnessing. Demonetization, post demonetization, people's perception towards cash has changed big time. So holding cash is as good as doing crime today. So things have changed structurally and basically because money has come online and things like UPI is a big boon for a country like us. So this is going to make a lot of organized players the edge over unorganized players. And that is also good for stock markets. Again, the same story which I have in this particular slide, you can see China 2007, the per capita was 2600 levels और 2011 होते होते वो डबल से ज्यादा हो गया 5500 levels हो गया. Per capita का डबल होना ना has got a multiplier effect. Don't think that it is a very small thing. 140 करोड़ की आबादी का जब इनकम डबल हो जाता है ना तो पूरा देश का नक्शा चेंज हो जाता है. So we are in that kind of a scenario, and I guess in the next 10 years is going to be the golden time for equities. If you are keeping yourself invested, this is the best thing that you can do for yourself and your family and your overall net worth. And the same thing can be witnessed in this particular slide as well. Now, this is the most heartening slide. If you want to see the future of India, it has to be through this slide. Now, if you just go through this slide, इसमें आपको दो चार्ट्स बने हुए दिखते हैं 2021 का चार्ट और 2031 का चार्ट. इफ यू सी इसमें हाउस होल्ड का नंबर दिया हुआ है. हाउस होल्ड का जो नंबर है इंडिया का, इट इज मतलब इसमें ये डेटा के हिसाब से ये बताया गया है कि हमारे पास 30 करोड़ घर है इंडिया में. 30 crores घर है इंडिया में, that is 294 million is basically if you convert it into crores, because crores की भाषा ही इंडियंस हम जनता ज्यादा अच्छी तरीके से समझती है. तो 30 crores is basically the household that we have. उसमें से $35,000 से ज्यादा जो कमाते हैं, अब $35,000 को जब आप रुपये में कन्वर्ट करते हो, इट्स बेसिकली पीपल अर्निंग मोर देन 30 lakh rupees. Only 2% of our population is earning more than 30 lakh rupees. Just one second. Only more than 2% of the people today, मतलब जो 30 लाख के ऊपर कमाने वाले जो घर हैं वो सिर्फ 2% है, और से 10,000 से 35,000 के रेंज में जो है वो सिर्फ 24% है. Mind you, $10,000 is roughly 8 lakh rupees and beyond, and this is going to get doubled in the next 7 years. Now just imagine that almost 50% of India is going to have more than 10 lakh rupees of income every year, and that is going to create a big shift in a lot of demands for a lot of different products. And just imagine 50% of India earning more than 10 lakh rupees, which today is not the case. So that is going to create a lot of demand for a lot of products, and hence equity will do very well. And this is something, ये जो data है, ये जो bracket है जहाँ पर हम हैं, not many countries in the world are in this kind of a situation, and hence India is the most loved destination when it comes to investing. And it's just a matter of time that even big FI money will start chasing money in India. What similarly some years back China has experienced that particular thing. So this is the basic that I wanted to tell you. Last thing is basically if there is one other thing which is huge when it comes to our economy and our markets is India has never been understood or never been actually seen as a manufacturing country. Okay, so today India's GDP का अगर आप manufacturing portion call out करें तो it is basically only 16%. Government's target is to take it to 25%. Now, whenever a presentation is being made, it is always been seen, okay, fine, उसमें कौन सी बड़ी बात है, 16 का 25 करना है, government का target करना है. When is the last time or anybody heard about a company like Apple manufacturing its iPhone in India and getting it exported to other countries? If you see this particular slide very closely, we are at FY24. This is slightly a older slide. So roughly government wants to 5x their output in 10 years. Just imagine government ka khud ka target is basically 5x manufacturing output. So just imagine there'll be so many companies which are also which belongs to this sector, which was not the story earlier, but things are going to change. So from $447 billion, the output is basically the government wants to take it to $2,000 billion. So with this, basically, I'll end my presentation. If there are any questions, I would love to answer. And I guess whatever is being discussed is basically just to give you a perspective about markets, and I hope it added some value to you guys. So if you have got any questions in particular, I'll be more than happy to answer. Uh, so we have got a couple of questions which is already there. Showing slide as I can see the first. Unable to view your presentation, we show some data. Fine. So if you have got any questions, please do ask. Otherwise, basically, please suggest of fast growing MF industries, multi or mid and HDFC, which one is better in Kotak Mahindra Bank? Kotak, okay, fine. So we'll definitely get in touch with you, Subrato ji. I'll ask our relationship manager to get in touch with you. And if I have to suggest you some good schemes within us, is whatever you have chosen are good schemes, and we have also come up with a lot of new NFOs. So before going on transportation and logistics. That is also one sector which is expected to do well. So you can get in touch with us. We'll be more than happy. I'll ask our relationship manager to contact you. Please answer my question, sir. Yeah. So that is what I'm doing. So I'll ask my relationship manager to basically get in touch with you. And if you want a suggestion from my side, the most fastest growing thing that you want to put is multi-cap as a good strategy. HDFC multi-cap fund has grown very well. Today the NAV is more than 13 rupees. Since it has been launched, it's been what, roughly 18 months, and 18 months with 30% return bana hai. And multi-cap, the best part is you get an exposure of everything, large, mid, small, over a period of time. And other than that, if you want something new, you can get invested in NFO as well. This is Transportation and Logistics Fund. Any other questions?
Dear customers, if you have any query, please just type down in question box. We will answer you. We have already answered Mr. Subroto's query on this session. Yeah, Mr. Subroto, you can start your SIPs through mobile app. We have facilities in mobile app. The only thing that funds which you are selecting, so we are not giving you the funds name, because before giving any particular funds name, you just like to understand the profile of the customer and what is the goal for the investing in mutual fund, and accordingly we suggest the fund name basically. That's what we are not giving the fund name on this webinar. So we'll definitely give you a call back. I'll personally give you a call back after this session. If you can mention your mobile number, that will be great. So Mr. Sachin is just giving thanks. Very well presented and explained the topic. Thank you, Mr. Sachin. Your appreciation is very important for us. Uh, this will help us to improve our quality of the presentation and product. Thank you so much. How is the mid cap? So Mr. Devasis wanted to know how is the mid cap opportunity fund and the small cap fund. So basically, Mr. Devasis, I would like to tell you that mid cap is doing well, and this rally is expected in mid cap opportunity. I mean mid cap funds, and definitely a small cap funds. Again, we are expecting a big rally in these two kind of categories of mutual fund. So definitely, you can choose. Uh, the best mid cap funds and the small cap funds, and then Renault, you can say AMCs like HDFC, ICICI, Kotak, whatever. So basically, definitely HDFC mid cap opportunity fund is there, and then the small cap, there are many other funds are there. So you can choose.
Which sectors will perform? So this is the question from which is very obvious. That is the company, the consumption because Second is the electric vehicle thing. That we are very the whole market. The biggest buzzword today is electric. So electric vehicle, e-commerce, and manufacturing. So these are the thing that in so this sector is something which will face a higher disruption in the next 8 years, and you can see higher growth coming out of from this sector.
So thank you. Now we have another question. This is related to direct equity. Basically, Mr. Subroto wants to know about the Spice Jet share. So, Mr. Subroto, I would like to tell you that uh, this is a specific script, and unless or until I have any data, so basically I'll just get in touch with the research team, and then somebody will give you a call on this SpiceJet call. So
Okay.
next we
The
have,
yes. So business cycle fund was basically it is doing extremely well. The area is growing more than 10% now, and it is doing extremely well. Keep yourself invested, and yeah, even if you want to add, or else we also have a loan which is called transportation logistic fund. That is also one scheme which we believe will do extremely well in the times to come. So you can just explore that and get in touch with your relationship manager. As far as business cycle we have to have more money to that. Okay.
thanks Mohit. So we have, I think we not have next question.
So yeah,
Yeah, so yeah, we have another one.
HDFC Flexi Cap, what is the continue? I don't have any goal will be retired. So continue with the SIP. To tell you, one of our active fund, we are managing more than 25,000 crores in this particular fund. So the idea is we have a mix of large, mid, and small in that. And just in case you are retiring, my idea would be just make some provision for your monthly cash flow. Keep yourself invested in this particular fund. This should be the last thing that you want to withdraw for your cash flow. Under digit kind of a return, uh, and it has done phenomenally well, wherein the money is going to so just keep yourself invested and possibly add some. Subrata ji, thank you so much for the feedback. It means a lot, and I guess the next time when we present, I will try to keep you entertained as well as give you some good insight. It really means a lot. Please do share your feedback like this. It helps us. Where can we get? Okay. So yeah, with this. So, wish you a very happy, happy investing, and please invest in markets. The idea is now then it will be kind of we are in a very very good kind of a scenario. I would urge everybody to invest. And please get in touch with your relevant talents. And thanks for taking time. Thank you so much, Santosh, for giving me this opportunity. And
Thanks, Mohit. Thanks, everyone. Thanks, dear customers. So we are again coming up tomorrow at same time, 11 o'clock, with different speaker, different topic. So request you all to join and just get the benefit of webinars and create your wealth. Thank you so much. Thank you for joining us.